All right, today we're jumping into a really interesting one. It's Sobi's latest earnings, and this is a classic story. A company that, by all accounts, just knocked it out of the park, but the stock kind of just stumbled. So let's figure out what's going on.
Yeah, this quarter was, well, it was a tale of two tapes for sure. On one hand, you have the actual results, which were just a massive operational beat, a knockout punch. But then you look at the market's reaction, and the shares just faded into the close. It's one of those situations that makes you scratch your head and ask, what did the market see that we're missing?
Okay, so here's how we're going to break this down. First, we'll look at the actual results versus what everyone was expecting. Then, we'll get into the guidance and what management was saying. We'll tackle the elephant in the room, that Vonjo write-down. After that, we'll look ahead at the pipeline and any catalysts. And finally, we'll give you our rating. Let's dive in. All right, first step, the results versus expectations. And let me tell you, this was a clear operational beat. The good news here is, well, it's pretty much everywhere you look in the core numbers. So on the top line, revenue came in at about 7.8 billion Swedish krono. Now, at first glance, that little 0.6% beat might not look like much, but you have to look under the hood. The real story here is the 21% growth when you strip out currency fluctuations. That tells you the underlying demand for their products is just incredibly strong. And then you get to the bottom line, and things get even more impressive. Adjusted earnings per share, up a whopping 40% from the same time last year. I mean, come on, that is the kind of growth that really makes you sit up and take notice. But for me, this is the number that really seals the deal on how healthy this quarter was. The adjusted EBITA, that's a key measure of their actual operating profit. It didn't just beat expectations, it crushed them by almost 15%. This isn't just growth for growth's sake. This shows the core business is an absolute profit machine. And when you lay it all out like this, you see the full picture. It's just a clean sweep. Revenue, profitability, earnings per share, a beat right across the board. You can see exactly why management sounded so confident on their call. The numbers totally back it up. So let's talk about that confidence. This wasn't some kind of fluke quarter. Management was really hammering home this theme of quality of growth. And because that growth is so solid, they felt good enough to raise their guidance for the rest of the year. Yeah, you can hear it right from the CEO, Guido Ockers. He said they delivered an outstanding Q3, highlighting that 21% growth. But the key part is where he says it was driven by the strategic growth portfolio. He's making it super clear this isn't random. It's about their core assets firing on all cylinders. And wow, here's that engine room he was talking about. Just look at these growth numbers. Doptelet up 46%. Gamifant nearly doubling at 98%. Even the hemophilia franchise is up over 30%. This is proof positive that their commercial strategy is working. It's hitting the mark, and these key drugs are gaining major traction. This right here is the core strength that the stock price action seems to be totally ignoring. So with that kind of incredible momentum, what do? Well, you raise your guidance. Management felt confident enough to bump up their outlook for the whole year. They went from forecasting high single-digit revenue growth to low double-digit growth. And the profit margin outlook got a nice little boost too. Okay, so we've got a clean beat, we've got soaring profits, we've got a guidance raise. Everything's pointing up, right? So why on earth did the stock sell off? Well, it all comes down to the elephant in the room, a single massive number. All right, before I show you the number, we have to talk about what this actually is. It's called a non-cash impairment charge. And the most important words there are non-cash, okay? Think of it like an accounting cleanup. You're just saying an asset on your books isn't worth what you once thought it was. It's a paper loss. No actual cash is leaving the bank. That's super important to remember. And here it is. Sobi took a 6.6 billion kroner right down on its drug, Vonjo. Now remember what we just said. This didn't touch their cash position at all. But a headline that big, it just creates a ton of negative noise. It tells the market, hey, our expectations for this one specific drug, we're hitting the reset button. But here's the thing. Vonjo is just one piece of the puzzle. It's so important to look past that big scary headline and focus on the pipeline, because that's the real roadmap for future growth. And trust me, that growth story is far from over. And that future is looking pretty busy, actually. I mean, the pipeline is just packed with potential catalysts over the next year and a half. You've got key trial data coming out for Gamifant, regulatory deadlines. These are real, tangible events that could be huge inflection points for the stock. Plenty for investors to keep an eye on.
Okay, so let's put this all together and figure out our final take. On one side, you have this booming operational business and a raised forecast. On the other, you have this big, scary-looking, but non-cash write-down. And then you have a future full of catalysts. So what's the opportunity in this disconnect?
Really, it all boils down to one simple question, especially when you see the stock pull back like this. What's the trade? Is this weakness an opportunity?
All right, here's our take. We think the market got this one wrong. It's a massive overreaction to a non-cash accounting charge. Everyone's focused on the scary headline, and they're completely ignoring the incredible fundamental strength of the core business. And what that does is it creates a valuation gap, a real opportunity for anyone willing to look past the noise and see the bigger picture. So because of that powerful core business that is just firing on all cylinders, and because of that very promising pipeline that's just loaded with catalysts, we think the fundamental story here is just too strong to ignore. Our rating on Sobi is outperform.
This is not financial advice.